Welcome to the end of day review for Friday, the 26th of January 2024. I'm doing this end of day review on a Saturday morning. Starting off with the economic calendar as we usually do. As you can see, for Friday there was no GBP red folder news, and thus there was no news release to influence our London session. And then for the New York session, we had one red folder news event. This was PCE price index, although a red folder news event, not as significant as something as GDP, NFP, or interest rates. And for that reason, I was happy to take any trades prior to this news release, leave them open during the news release, and then obviously, if I didn't take any trades, I was happy to take a trade subsequent to this and fade the news release accordingly. Also, I was okay with allowing this news release to trigger me into any entries. So that was my approach for the New York session, but I think what will help is if we go through the 4-hour charts and we go through the detail. I did wind up taking a loss, and at the time of taking it I was sure that it was per my trade plan. However, after subsequently analyzing the trade in my end of day review, which is the set of charts right here, um, which I did do an EOD video for. Essentially, I did a technical analysis markup, which I will add to the end of this review. But we'll go through the detail now, starting with the daily chart. As you can see, there wasn't any daily consecutive bias candles to be concerned about for today, and thus there was no bias driving any specific narrative from the daily time frame. Then on the 4-hour, nothing really changed over. Yeah, nothing really changed in terms of what we're trying to achieve over the week. We're still in this unconfirmed market structure, and if you recall, the reason why that is because we had this change of character right here. We can see there's been these body breaks, so the bullish market structure that's been around for quite some time is broken, and now we essentially in that uncertain state where we don't know if this is going to actually follow through and we're going to get new bearish market structure forming, or alternatively, is this just a liquidity grab to then fuel the move to the upside and we continue the bullish market trend. In terms of Friday specific PA, if you recall, essentially Tuesday, or rather Wednesday, we actually extended this pro trend previously confirmed primary leg. And why I say pro trend previously confirmed is because the underlying trend was bullish. So the previously confirmed trend was confirmed bullish market structure, and thus this bullish leg is pro trend previously confirmed primary leg. As you can see, we didn't react to anything in particular to the left. So what we did have to do is actually wait for a 4H chock of this 4H OB right here to then validate the primary leg. As you can see, I got this primary leg marked out, and then obviously we've been reacting to this pro-trend unconfirmed OB right here. The pro-trend unconfirmed OB on the 15 and 5 minute has developed the primary leg as a result of reacting from it, and then obviously we're looking for secondary legs to be generated from this 4H primary leg. It's important to note that we are reacting against two 4H OBs, and we need to tread cautiously to ensure that we're not trading against any 4H OBs, because trading against a 4H OB in an uncertain scenario is often a recipe for disaster. Having said all of that, in terms of this pro-trend unconfirmed primary leg that we see right here, while we can see that we are reacting to this primary leg and any immediate shorts are invalid, what we can do is identify unmitigated areas on the 5 and 15 minute levels such as this, and then if we can validate that there has been IRL built to the downside, then we can essentially target the reaction point of this 4H OB. Remember that once we get back into a new set of 4H areas which are unmitigated as part of this 4H OB, then obviously again we cannot trade this until we develop new triangles in the 5 minute, essentially meaning new IRL and a new secondary leg developed, in which case we can then target that again. So it's been, over the past week or so, it's been really challenging because it's a tough scenario to navigate. Oftentimes this is where ranges become really prevalent, and in that case it's quite easy to take a lot of losses, and which is why I have that rule in place where under these scenarios I only consider trading if three conditions are met. The first being we have a 4HOB reaction backing the idea. We haven't reached a substructure target, and that substructure target is available. And once that substructure target is reached, then obviously that direction trading becomes invalid until we validate a new 4HOB or reset the 4HOB by coming below the initial reaction point that took out the substructure. And then obviously my last rule is ensuring that there's available internal range liquidity to target any intended targets. Also, during these scenarios, I think it's wise to ensure that you don't leave any runners. It's always best to pay yourself. So that's pretty much a rundown of my rule set. Then touching specifically on Friday, like I said, there was reasons to trade both directions. There wasn't any weekly bias or daily consecutive candles to tell us to trade one direction or the other. So we were essentially able to trade both directions provided we had confirmation thereof. So starting in the morning with Frankfurt, what you can see is that we came into this primary OB, part of this pro-trend unconfirmed primary leg, and we developed the secondary OB, enabling us to short. Again, we have reacted to this 4HOB, but as you can see, we've built enough IRL to the downside, with this being the last IRL point before the extreme. This would be our ultimate target, like right here. But as you can see, price didn't really give us an opportunity to enter, with no proper pullbacks to then get entered into and then take a trade. So shorts were valid, and we got the direction right. Unfortunately, there was just no entry point in that regard, so I'll remove that entry. And then once we reach back inside this 4HOB, obviously shorts are now off the cards, at least until we build more IRL and we react to a 5-minute primary POI from which we can build a new pro-trend unconfirmed secondary leg, which you'll see happened in and around the London session. Anyway, at this point we validated that demand was in control, and we have the secondary leg being validated right here, but again price had a lot of momentum and didn't retrace adequately to enable us to take a long position, which honestly would have been really nice. A 123 was easily excuse me, a 123 would have been easily possible, so again that didn't materialize. And then now coming into the New York session, or the lull rather, we tapped into this primary OB right here, and while I didn't draw it extremely precisely, perhaps I can actually just use this. So I'm using this range and not this specific level, because what we can see is that both those OBs are within the structural point. So if you look here, we had the reaction, and then this was our chalk level, which did indeed I just want to lighten this up, which did indeed get wicked, and there was valid entry here. However, this was a validation of a POI during the London lull, and I'm not, per my trade plan, I don't take any POIs validated by the lull, because it's more likely that when New York opens, and it's actually going to use the entire London range as liquidity. As you can see, that was actually the case right here. You can see we wicked nicely, and then we chalked. But this is where the error came in on my end, because if we look at this, these wicks right here that made the new high are wick highs that didn't body break the structure point right here, which means this leg isn't really a true leg to have OB validated on, because any POI needs a body break of structure on the time frames that I'm trading from. And as you can see, this POI had no body break and thus was invalid, which meant that the real level, or the real chalk level, was actually this one. And as you can see, that's what price reacted to and then came higher and then subsequently broke it later. So I was a bit premature with this trade and it didn't work out in my favor, but you know, there's no point crying over spilt milk. So having said that, I took that loss, which was my third consecutive loss for this week. Essentially, I'm going through a losing streak, and yeah, honestly, I've evaluated my trades quite appropriately in all of my end of days this past week, and I'm highly certain that all of the trades except for this one meet my trading plan. So having said that, it's a matter of perspective at the moment, because while I am going through this losing streak, I have to keep in mind the law of small numbers, which essentially means that if if you're experiencing a winning streak or a losing streak, those trades like these are three trades out of a basket of how many trades have you data gathered from. And in your data gathering, you don't make decisions or change your trading plan because you went through three losses or four losses. Obviously, if it's a recurring pattern over 100 or 200 trades, then sure, there might be something to look into. But as it stands live trading right now, I know that per my trading plan, a three losing streak, 2 to 3 losing streak is quite normal. From four onwards, it's a little bit abnormal, but again, we don't always have data over 1,000 trades to say, okay, I can have high, extremely high, like 99% confidence level that four losing streaks is a problem. Given that fact, um, it's about now being disciplined, continuing to execute my trading plan, and not making any changes to my trading plan because a very very small sample of trades were losses. So having said all of that, I think this weekend it's just for me to reflect and acknowledge that this is small numbers and it's not actually worth trading my plan or changing my trading plan. And then over and above that, it's to remain consistent with executing my trading plan and having conviction that my edge will play out and that this losing streak will just be a blip in my equity curve for the year. So that's pretty much my outlook. I did want to say or just highlight quickly that I did do this end of day technical markup, which you'll find at the end of the video as a clean slate markup, which you can follow along if you'd like. But again, you'll just see some notes here where I'm explaining some of my thought processes as I came into the New York session. So as you can see, we had this London high of the day. It was then wicked, which then meant that the secondary leg that was built right here is reset. And I think this is what threw me off when I took the New York entry, because I knew the secondary leg reset. I didn't really consider if this was a valid POI. I was more focused on the fact that at what point is this leg going to be validated, and instead of focusing on a real POI that's actually validated by a body break such as this one, I used this one somewhat without thinking too carefully about it. So there was an error on my side and I took the loss. And then just in terms of the thoughts of if this was the valid chalk level right here and we did get the new secondary developed right here, then why would I trade when New York has put in a new high of the day? And basically my rationale for that is that we're sweeping London's range, so no body break, to suggest that we're truly putting a New York high of the day, and thus there's more evidence than not to suggest that all we're doing with these wicks is just grabbing the London range liquidity rather than actually putting in a new high of the day in New York, and thus I assume that the London high of day will still hold. And then subsequently to that, we had the news release, and this news release was neutral, which means we can't really support a New York high of the day short trade because we don't have confidence that the New York high of the day will hold. There was a particular consideration at this point when we body broke and created an official New York high of the day. At that point, trying to short stopped making sense because obviously we don't have red folder news to support that this New York high of the day will actually hold. But my data gathering and testing and over a large sample of trades starting from back in 2010, I think. Essentially, if New York puts in the high of the day in a bullish day, then it's more likely than not that if you're trying to short, you actually got the daily direction wrong. So that's something to consider. And then, yeah, I guess that's pretty much the end of day review. I hope this helped. It was an intricate day to navigate. I hope you had a good trading day, and we'll chat again on Monday for the London outlook.